Hello again. So this is the cryptocurrency stocks and shares and forex trading seminar. And during this seminar, we're going to explore exactly what all those subject matters are. So cryptocurrency, what is it? How do you use it? How do you get involved with it? We're going to understand about stocks and shares within public listed companies and how to be able to invest and make opportunities as well as profits from that particular market. And then one last particular area will be foreign exchange and how to use different currencies and their change of price in the market, and how to make this a viable business option for yourself with profits or savings or a day-to-day float as a normal sort of 9 to 5 option for yourself as a self-employed person. Okay, so let me start off with probably the most popular subject for 2021, which is cryptocurrency. I'm sure everybody over Christmas saw the monstrous rise of Bitcoin, starting to pick up at around about £18,000 a coin, peaking all the way up to just over 30,000 and creeping towards the $40,000 mark. There are rumors that this month, the seminar is recorded in January, rumors that it can go as high as $50,000 again per coin. So a lot of opportunities for people that can get in at cheaper prices than that for opportunities to make some money. So by definition, according to Wikipedia, a cryptocurrency is a digital asset designed to work as a medium of exchange. A medium of exchange is a means to trade or have a peer-to-peer sale or exchange of value between two individuals, where an individual coin ownership records are stored in a ledger. A ledger is like a record, or kind of like receipt list, but particularly this type of ledger is what's known as a blockchain ledger. So it's almost like an uncheatable history of truth. And this helps obviously establish whether money's been spent or not, and from which individual to which organization or individual again, etc., etc. So stored in a ledger existing in a form of computerized database using strong cryptography. So lots of complex words here, but everybody that uses WhatsApp or Telegram or other type of encrypted signals, another one, messaging services, you're using elements that crypto uses again. So to encrypt something just means it's difficult to find it, steal it whilst it's in transit. So moving from place to place. And here, like I say, it says stored in a ledger form of computerized database using strong cryptography. So they encode the currency to secure transaction records, okay, and to control the creation of additional coins and to verify the transfer of coin ownership. It typically does not exist in a physical form, so you'll never actually physically see crypto. It's all digital numbers created on a screen that actually have real backed value in terms of currency. Yeah, so it doesn't matter whether it's dollars, pounds, euros, yen, you name it. Okay, your crypto will have a financial equivalent, and it will be able to go up and down because they change in value all the time based on how the market is performing. This is something we're going to see with every aspect that we're looking at today. Okay, so cryptocurrency, stocks and shares, and forex are all volatile to something called the fluctuation within the market. It's big, complicated words, but it basically means there's stuff going up or down in value. Okay, and this is your job to keep an eye on it and make informed decisions and windows of opportunity to make an investment to ideally try and make a profit and avoid a loss. Okay, so like I say, it typically does not exist in a physical form and is typically not issued by a central authority. So this isn't issued by banks. Cryptocurrency is created by the people for the people and exchanged between the people without banks being able to profit. This is why a lot of people like cryptocurrency, because they're not the biggest fan of banks or their charges and potentially some of their agenda with money in the first place. I'm not here to get into that, but I can highlight it because this is why cryptocurrency has become everybody's favorite thing these days, as it cuts the bank out of making and buying things when involved with money. Okay. So cryptocurrencies typically use decentralized control, so no news of the bank and the individual itself, as opposed to a centralized digital currency and central banking systems. So for example, the Central Bank of England is the Bank of England, which issue pounds, and you can get it in £5 notes, £10 notes, £20, 50, etc., etc. Well, this goes through an exchange who only deal in certain types of cryptocurrency, and we're going to get into the names of those shortly. Okay, I'm going to try and use some videos to help summarize this as well for you, nice and easy at the end, and also simplify some of the technical words that are in some of these videos too. So when a cryptocurrency is minted, i.e. created prior to insurance, or issued by a single user, it is generally considered centralized. So you can actually create coins yourself as opposed to needing a bank. Okay, there's a process for that called mining. We're going to look into that in a stage further in a second. Okay, and then when implemented in decentralized control, each cryptocurrency works through distributed ledger technology, typically a blockchain. Sounds very complicated, but blockchain is like this indelible receipt. And if you don't know what indelible means, that means you can't really cheat it or fake it or pull a fast one of it. It will just tell you the truth as it happened, undeniably, almost like watching CCTV footage for you to make your own opinion from it. Okay, and that serves a public financial transaction database. So blockchain helps prove everything that's ever happened, and it does it without needing to use a bank, which means you don't have to trust the bank. You can just trust each other and the blockchain. Okay, Bitcoin first released as an open source software in 2009. It's the first decentralized cryptocurrency. Since the release of Bitcoin, other cryptocurrencies have been created, so we're going to get into all of that in a second. Bitcoin has been a big popular thing to talk about, but these days in the market there's lots of other cryptocurrencies that you can make money from. If anyone else has been playing with the market before Christmas, other cryptocurrencies like Ethereum, Litecoin, and various others like XRP, Stellar, have all done very well in the months leading up to Christmas. So again, if people had money in and were doing what we call short-term investments, so you just do it over a short window, anything from a couple of hours to a couple of months, you know, the change in price means you can take a profit, but you obviously have to keep your eye on it pretty much on the hour or on the minute for some people, to get the best possible price for the day. Okay, but we're going to have a look at that in a second. So let me play a quick video that makes this nice and simple to summarize for you all here now. Okay.
Today, cryptocurrencies have become a global phenomenon known by most people, but understood by few. In 2018, you'll have a hard time finding a major bank, accounting firm, software company, or government that hasn't researched cryptocurrencies or started a blockchain project. Beyond the noise and the press releases, many people often fail to understand the basic concepts. So let's walk through the whole story. What are cryptocurrencies? Satoshi invented Bitcoin in 2008.
Satoshi is a person, just in case you're worried, okay? And the rumors are, I say rumors because it's still unproven if he actually was a person or a fictitious person, but rumored to be a Chinese individual that created the cryptocurrency in the first place.
As a peer-to-peer electronic cash system. To realize digital cash, you need a payment network with accounts, balances, and transactions. That's easy to understand. One major problem every payment network has to solve is to prevent double spending. That is, to prevent one entity from spending the same amount twice. Usually, this is done by a central server who keeps records of all the balances. In a decentralized network, you don't have this server, so you need every single entity of the network to do this job. Every peer in the network needs to have a full.
So just to clarify, because you're not using a bank, you'll rely on computers and code transferring between computers to be able to make sure that you don't have the ability to spend the same currency twice by mistake.
List with all the transactions to check if future transactions are valid, or an attempt to double spend. But how can these entities keep a consensus about these records? If the peers on the network disagree about one single minor balance, everything breaks. They need absolute consensus. Nobody knew how to achieve this until Satoshi proved it was possible. Cryptocurrencies are a key part of the solution. To illustrate this, we'll look at the transactions on the network. A transaction is a file that says, Bob gives X Bitcoin to Alice and is signed digitally by Bob. Once signed, the transaction is broadcasted to the network, sent from one peer to every other peer. This is standard P2P technology. Nothing special happening here. After a specific amount of time, the transaction gets confirmed. Only miners can confirm transactions. This is their job in a cryptocurrency network.
So miners, we're not talking about kids here. We're talking about miners like the people that go down into the various different points in the ground to dig up gold, silver, and various other precious entities that people require for commercial things. So here they've created a digital option for you to be able to mine and create cryptocurrency, as well as confirm all of the blockchain spends and receipts together to make sure that there isn't this double spend thing going on.
They take transactions, stamp them as legitimate, and spread them in the network. After a transaction is confirmed by a miner, every node has to add it to its database. It has to become part of the blockchain. For this job, the miners are rewarded with cryptocurrency, for example, bitcoins. Anybody can be a miner. They just need to use some of their computer's power to qualify for the task.
I hope everyone's hearing an opportunity window here for yourself, potentially down the line as well, to be able to be paid to help regulate the market.
Every miner competes to solve a cryptographic puzzle. After finding a solution, a miner can confirm the transaction and add it to the blockchain. As an incentive to do this, they then receive a payment from the network in the form of a cryptocurrency. In this way, a network of independent actors are economically incentivized to maintain the legit.
So if, and it's a big if you have a computer powerful enough, we'll cover this in a second anyway, I'll say in a second later in the seminar. If you have computers powerful enough to be able to do this, you'll notice you're also paid for this. So technically you create Bitcoin for yourself in return for the mining services you offer. And obviously as the Bitcoin comes out, it could be worth an astronomical value, which makes your time worthwhile every time you're pulling new Bitcoin out of the system for your work as a miner.
Legitimacy of the transaction history. So that's the gist of it. Cryptocurrencies are the key to the complex digital cash problem that Satoshi solved: how to maintain integrity and consensus across independent and potentially malicious actors. Cryptocurrencies are essentially the monetary incentive offered to anyone willing to keep the network secure.
So, a relatively simple explanation. I'm going to give you a second one here. It's only 2 minutes long again, but just so that you fully understand cryptocurrency, the market, how it works, its volatility, which means the fact that it can go up and down. It can be worth lots one day and worth absolutely nothing the next. So you really do have to make an intelligent prediction and keep an eye on what point you entered and what point you exit to make sure that you get a profit and not a loss from this situation.
When we buy or sell things, the payment is usually processed by a bank or credit card company. Problem number one, the companies often take a cut of the transaction. Two, we have to trust these companies to protect our sensitive data from hackers. Three, most international payments take a long time and are expensive. To solve these problems, we could use a special currency that is secure and based on the science of cryptography, which is.
So again, for anyone feeling confused, cryptography is what WhatsApp and Signal, Telegram, all these kind of encrypted communication messaging apps these days all use encryption. So encryption is just putting stuff into code, which you're now going to see on the screen. And it's a way of protecting information using mathematics, basically.
Which is a way of protecting information using mathematics. This special type of currency is called a cryptocurrency and only exists in computer networks. When you send someone this special currency, the money goes directly to them, removing the middleman. And at the same time, the transaction is broadcast to the entire network and recorded in a permanent way, which means it's almost impossible to fool the system. Costs of making payments are lower, transactions are faster, especially across countries, and even those people around the globe who don't have bank accounts can buy or sell goods and participate in the global economy. However, there are some risks. The transactions in most cryptocurrencies are anonymous. Some cryptocurrencies can even be untraceable. This can make it easier for the bad guys to make payments without being noticed. If you lose your password, you could lose all your money. At the moment, cryptocurrencies are highly volatile.
For anyone that doesn't know what that word means, it just means they're incredibly vulnerable. They can go up and down, so you're not guaranteed anything for anything longer than a second and the numbers shared on the screen. So it really is like trying to pull the handle on a jackpot machine at the best point when you've got the best numbers to get the jackpot win. It's the simplest way of describing it. Okay, so you will have to put time and energy into this and keep an eye quite a bit throughout the day to make sure your money doesn't go up or down in a way that you weren't comfortable. But there is tools to help with that called automation, and we're going to look at that stuff later as well.
They can't process large amounts of transactions quickly yet, and they're not even widely accepted. But if we can counter the risks, then this new technology, or some variation of it, can completely change the way we sell, buy, save, invest, and pay our bills. And who knows, this could be the next step in the evolution of money.
Okay. Main reason I wanted to use this second video was to illustrate as well for anyone else that's been using the other seminars that, again, this might also be something you want to pay attention to for payment methods with the products and services you're selling. Leading towards Christmas, PayPal have made a huge commitment to try and include crypto as part of the payment methods, and many other platforms with equal kind of mindsets to PayPal, so they're like a digital wallet and payment transaction point, will be starting to include cryptocurrency more and more. So this really is going to become a future money, and that's the other thing I do want to sort of up Periscope or put on your radar while you're listening to these type of seminars, is that whether you plan to trade with crypto, you may want to be aware of how powerful this is going to be as a future currency, and potentially even have business ideas that can result in crypto as payment methods for that, where again, day to day, your profits could go up just because you were charging crypto and the value of crypto has gone up since the person made the payment. Anyway, I won't get lost in that, and let's start going through some of the others. So most importantly then, let's try and understand what type of cryptocurrencies we have. This is probably one of the best websites that's out there for understanding how many cryptos are available and their immediate value on the second. So as I sit here now, all of the numbers that you can see is exactly how much crypto is worth. So as we sit here and the video is recorded now, Bitcoin is worth $31,000 just for one coin. If you have two coins, you're now into 60,000. And as you can see, in the last 24 hours, it's dropped 4.85% in its value, and in the last 7 days it's down almost 20%, so we're just over 15 at 17.3, and all of this is reflected with a red graph showing the value at the beginning of the week to where the value is now. So this has dropped, but you'll see it goes up and down all the time, so hopefully this explains volatility for you visually now, as in this hasn't stayed at its value for the whole week. Throughout the week it's changed, but if you had it here and sold at the top and bought again at the bottom with the money you had at the top, there's some profit in this. Okay, we'll have a look at how to buy on the dip and understand bullish and bearish tendencies later. Okay, I'm probably using words that sound confusing, but all of those are going to be explained and defined for you in a second. So let's just stay on task for a second here. So the top 5 cryptocurrencies currently are Bitcoin, Ethereum, Tether, Polkadot, and XRP. Cardano has come from nowhere in the last few months and really made a dominant impact for itself. Litecoin is doing very well. Chainlink has a huge army behind it. Bitcoin Cash and Binance Coin are also available as well. There's plenty more in the market. Stellar, okay, is another one that's linked with XRP and various others. You've even got a US digital coin here that's available instead. And doesn't really move off the value of $1 from what I can see, but you'll see there are loads and loads and loads of cryptocurrencies that you can invest in, and all of them have profitability options and loss options in the same way. Okay, they will always have different values and perform differently in the market to each other because of how the intricacy of their individual cryptocurrency and the volumes buying and selling change them and the value that's available. Probably sounds very complicated, but basically every Bitcoin performs in its own way based on how many people are using it, buying it, and selling it. It's the simple way to say it. Okay.